Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 30th of May, 2025, and the end of the month here was a good month for equities besides biotechs, which continue to be a group under pressure. Russell 2000 did separate themselves from the biotechs. They've kind of been trading together for a while there, but a solid month overall. So let's take a look at the charts and make some sense of it. We'll start actually with Bitcoin because I always forget to mention it if I don't do it early on, as I just start talking about stocks and equity, the equities markets. Anyways, Bitcoin is still having a little bit of trouble with that breakout level. It has come down to the first anchored VWAP that is supposed to be a level of interest that I've been talking about with subscribers. Below that would be this one right here, and that's back to the 100,000 level, which is, of course, a round number and likely to be where there's buyers. So, we have a very short-term pattern of lower highs and lower lows, just a little bit of profit taking. Let's see how it behaves if and when it gets down towards that 100,000 level. As for a couple of the other cryptos, I'm still long a little bit of Ethereum, and it is holding the anchor from this most recent rally. Below that, it could come down to 2,300. Keep in mind when you look at Ethereum in particular, that it's been finding supply here at the 200-day moving average, which is declining. And the same is true with Solana. So maybe those ones need a little bit more work before they can really make a bigger move higher. But nonetheless, I'm going to still hold on to that Ethereum and hopefully add to it at lower prices. I didn't want to talk about AMD. Let's talk about the S&P 500. We had a very volatile day here as it was back and forth. We broke below the 5-day moving average in this prior low, and we came right back up through it. So the buyers were able to regain control here at the end of the month. Next week, we're going to see this is likely an important level that the market needs to hold. We have two unfilled gaps just in the last couple of weeks here, so keep that in mind. I'm not a believer, as you know, that all gaps get filled, but this one is pretty close by. So if we break below that, I would expect a minimum of a move down towards about 580. Otherwise, you're looking at the daily chart. We held the 200-day moving average. We held the 20-day moving average. Those are all things that happen in bullish environments. The NASDAQ also had a bit of volatility, broke below this little band of support and the anchor off of this prior gap up. We did not come down and close the gap in here. We came a lot closer, but this again is going to be an important level. If we break below that, then this is the next level of interest. It's getting a little bit choppy up here, and that volatility often peaks at turning points and diminishes with the trend. I'm not calling any top here. We're above the 5-day moving average. We're above a 10, which you don't see here. We're above a 20 and a 50, but let's just see how it behaves around that 510, 508 level if we do see some pullback. Russell 2000, I'd like to think that it's building energy for a break past 210, as we saw a strong shakeout on that gap lower on last Friday, actually. We had a 4-day week this week, of course. But, we saw selling right here, even right at the end of the day. And the anchor off of this gap right here into the anchor from the all-time high, not the all-time high, rather, but the high from last year, has been a pretty good level of supply. And that's also where we see the anchor from the prior year as well, that black line there. Now, that might not be so important, but it's worth noting because it is there. Anyways, if we can kind of rebuild in here, maybe we can see, they build some energy. Perhaps this will end up being a higher low to push beyond this and then go to challenge maybe that 200-day moving average. But right now, I don't see an edge in this. I see a choppy environment. So just, be patient with it. The semiconductors, of course, were led by Nvidia. They did come down right to the anchor off of this level right here, which is the same anchor you see on the SPY chart, on the Q chart, on the Russell 2000 chart, and of course again here on the SPY. They're all in the same exact spot. That was the handoff from the anchor off of the low that we saw right here in late April. Anyways, this is clearly an important level. Let's just call it 235. If we break below and hold below there, then maybe this, this will lead the rest of the market a little bit lower. But for now, if you look at it just right here on this 30-minute time frame, we've got this band of resistance up here. Here's the midpoint which we're at. So we're just kind of in a big choppy range. The good news is we came down and tested the 20-day moving average and the 200-day. So we are holding on to gains in this area. And this was supposed to be this prior support was supposed to be resistance. Instead, it gapped up through there, and now it's holding as support. So that's a good thing. That's what we want to see continue to hold. Breaking below 235 could be trouble for the semiconductors, and you can't talk about the semiconductors, well, of course, without talking about Nvidia. Nvidia's been just a super choppy stock pretty much all year. First, we had all this volatility to the downside with lower highs and lower lows. Now we're seeing higher highs and higher lows with a lot of volatility. Now, this was the earnings gap here, and since then, we've seen this little pattern over the last couple days of lower highs and lower lows. We've come right down to the anchor off of this gap, and we held there today. So I think that today's low will be important next week, and more important is probably similar to that 235 level. 235 here in the SMH. In Nvidia, I think the level is 130. This anchor will catch up to it by the time it gets to that point, if it does. And then what we would want to see, if, I wouldn't short it below there. That's definitely not something I would do. But if it made a lower high in there, then it might pave the way for a bigger decline. But for now, I don't think you can really look at it as a short candidate. That's not my point here. My point is we're above a rising 20-day moving average and 50-day moving average. And it's just maybe due for a little bit further consolidation. The biggest, most important level in Nvidia is that 130 level. So keep an eye on that. Biotech, as mentioned, they are still the worst group here. They are down, what did I say, about 5% year to date. XBI, where did you go? 4.5% for the month and 12% year to date. So, it tried to break this little band of resistance here and couldn't hold it. And it's not really supposed to when you have a declining 20, that red dashed line, and declining 50, that dashed blue line. When we're below those, you're typically not expecting for rallies to develop from there. Now next week we have Monday we get rid of this data, Tuesday we get rid of this data. So at least we're going to see the 20-day moving average start to flatten out and perhaps turn higher. It'll take another week or so before the before the 50-day moving average can do that in these biotech stocks. So we've got higher lows, we've got lower highs. This is, as they say, a triangle. And what happens? Well, as the range compresses, it breaks out, typically in the direction of the longer term time frame, which would mean lower. But I'm not saying that it has to do that. I'm going to say that, if it breaks higher, then I think that's probably a decent trade, but maybe towards the end of next week would be the best case in there. Financial stocks continue to behave very well. There's prior resistance holding a support. That 5-day moving average is curling higher. We've got higher lows in there. Energy names, this group still looks the most vulnerable to me, and I think that you break down below this level again, it's probably worth, if you're a short seller, it's probably worth a shot for a short with a stop either above this high right here, or if this ends up being a high right here. If it does something like this and just continues to move higher, forget about the short. It means that the buyers took control, but it's vulnerable down here. The more time support is tested, the more likely, but not guaranteed, it is that that support level will break. So if it breaks, you look to get involved on the short side. But then you don't just say, okay, I'm short, I'm right. You say, okay, what would change that opinion? What would change that opinion is when we see the pattern of lower highs coming into it, if we make another lower low and we short that lower low, well, what would invalidate this downtrend? The downtrend is defined by lower highs and lower lows. So if it breaks the low and then makes a higher high, our definition of downtrend no longer exists, so it's absolutely foolish to remain short. And that gives us the basis for a risk-reward scenario. It doesn't mean I'm bearish these energy names. I'm looking at it as a potential bearish trade. That's it. My bias is let's see. But the evidence is pointing me towards it seems more likely it's going to decline from here. So let's talk about Palantir for a moment, because big day there today, but man, that was volatile. I was in this a little bit here today, but I was not looking for this type of volatility. It did a perfect chase the gap or wait for VWAP. I didn't get involved in there. I traded it over here a little bit, but man, it went from, the low, it gapped up, it pulled back, it gapped up to 126, pulled back to 123. rallied up to 132, back down to 20. Just crazy. If you're a day trader, that's great. Or if you're just holding it and you have your stops underneath one of these higher lows right in here, well, then it's your job to manage risk according to your time frame. Thanks for tuning in and have a good weekend.